We got a nice softball question from the audience. I have a revenue company of $250,000 a year, and I'm looking to take it to the next level. And how am I able to do that? Well, I'm guessing that your company is something in the way of a service provider, maybe something in the way in trades, construction, something like that level. So we're going to use that as an example, but it's really across the board. What is it that takes your company, if you are someone that started a business a couple of years ago and found out that you're really good at it, and that's usually what happens for most business owners, is they start helping a friend out with construction work or some type of trade work, and they find out they're actually really good at it. So they start getting paid for it, and then suddenly you get really, really busy, and you're bringing in $250,000 a year, and you need probably new equipment to make the next expansion because you've put all your cash into it, you've put all your capital into it, your friends have put all your capital into it. You need to probably get another piece of equipment. So you need a new widget maker. So we're going to use what's going to be our example today? We're going to be a tree service today. That sounds great. Got a tree service company, and you suddenly decide, in order to grow your business, instead of renting a dump truck and renting a stump grinder and a crane, you decide, hey, I am busy enough that I need to start buying one of those things, because those things are costing me probably between $5,000 and $10,000 a month each for each of those three pieces. So we end up finding out how you take your business to the next level is you buy that equipment. You purchase that equipment in a very specific way so that you can maximize the cash flow for your business. And what I'm talking about that is you finance that equipment. And let's just say in this example, you need three pieces of equipment, and you are paying, let's just say $5,000 a month for those three pieces of equipment: stump grinder, dump truck, crane, or lift, whatever you want to call it. Those are $5,000 a month each fixed cost. So how about I here at my company, Direct Credit Funding, we go ahead and tell you, hey, you know what we can do? How about we approve you to purchase all three of those pieces of equipment so that you only have a payment on the dump truck of $1,500 a month. You only have a payment on the lift, $1,500 a month, and the chipper, $1,500 a month. Okay, those alone, if you take that equipment and you finance that equipment over time, you are saving your company what? That's going to be now $3,500 a month, considering you were paying $15,000 a month for those three pieces of equipment. I can take that and lower your equipment cost or your monthly outlay down to $3,500 a month. The reason that what will take your business to the next level is adding additional equipment that is income producing. And that's what I'm interested in hearing, number one. I want the equipment for your business to help take you to the next level. So let's just say by adding this equipment to your business, you're going to increase your cash flow by anywhere from $15,000 to $25,000 a month. So let's just use $20,000 a month as an example. By having these pieces of equipment and having them around you all the time, you get to leverage that equipment and earn more cash flow on your equipment, which in turn means more gross revenue for your business, which is what we need to scale and grow your business. Because the growth point from $200,000 to $1 million is not that far off. And then once you hit $1 million, you're in an entirely different category when ultimately we can stabilize and cash flow and turn that into about a $5 million company, which eventually turns into a company that you sell in a merger and acquisition, which can be very, very profitable for all of you. But let's get back to our core guy, that's the tree service guy at $250,000 a year. Let's just say that you are a manufacturer of something. Doesn't really matter what you make. And you're a manufacturing company, and in order to grow and expand your product, because you just got a new order in because they need another $5,000 units from you starting next month, you need a new widget maker. Okay, it is what it is. You need a new widget maker. That widget maker costs you $50,000. To get a new widget maker that will increase your production by 5,000 units per week. How much does that widget maker cost? That widget maker costs $50,000. You have one of two choices to fulfill this order to take your business to the next level. You can either take that $50,000 cash, that if you have it in your pocket, and go ahead and buy that piece of equipment and give that $50,000 to the vendor, purchase your equipment. If that piece of equipment is going to generate another $25,000 worth of gross income for your business each month, that's where the value of purchasing that equipment is. If you have an order to bring in another $50,000 unit, which translates into $25,000 increased revenue for your company the next month, that's what will start taking your business to the next level. So the point of what I'm good at here is taking and leveraging that equipment that you're purchasing. So you have two choices when making that equipment purchase. You can outlay the $50,000, take it out of your company, give it to the vendor, you buy it for $50,000. Or you can finance that piece of equipment for a fraction of what you would take that $50,000 for. You could do one of two things. You could make monthly payments on that $50,000 piece of about $1,250 a month. And then you're still going to generate the same $25,000 per month that you were generating regardless. But either way, you're going to be generating that additional $25,000 a month from this equipment, whether you finance it or whether you pay for it for cash. You have two choices with your company's pile of money that you have right now. You can take this $50,000 that you have, pay for this piece of equipment. It's still going to generate you $25,000 a month. You can take this same $50,000, leverage the cash flow, finance it for $1,250 a month, and then you're still going to have $48,750 in your bank account to still work with, to make additional products, to increase your revenue, to add additional people, increase sales, buy another machine. Hell, maybe you would buy two machines for $50,000 each, still each generating $25,000 a month each. And then we bought two of them for a cost of what, $2,500 a month? That actually seems like a really good deal. It actually seems like the smarter thing to do, as opposed to taking your $50,000 pile of cash and paying for it here, and then you have zero cash left in your company, and then you're just kind of betting on all this other shit to work out. So just listen to what it is on leveraging your capital. When you think about paying it for cash, consider that's not always the best option for your company. Leveraging it. Plus, literally, you could get if this machine here is making $25,000 a month and this one's making $25,000 a month, we probably at that point could add a third one, or we're going to get bigger orders anyway, and think of how we leverage that again. Like that payment might be $2,500 a month, and by then you're going to be generating $50,000 a month worth of revenue. You see how that compounds and adds up? That's how you take your business to the next level when you're at a $250,000 business. How do you get rich? Working for yourself. That's really, that is probably the number one. If I would have known earlier about using my connections of my people that I knew and surrounding myself with the right people at the right times, earlier in my life, that probably would have made a difference. But for me, I found a niche that I was good at, which in my space is the equipment finance space, because finance has always been what's interesting to me. But finding your niche inside the niche really matters, because there's a lot of people into the different scale of financing, which Aaron and I have talked about. There's big, super large money and medium and small. And I'm really good at the small to medium sized business, which is your mom and pops up to about your 50 to 100 is where I'm really, really good at. I can help those companies grow and expand and mentor those companies. That's what I found was my niche in the world. So you need to find out what your special niche as, which you'll know when you get there. It's just like any of these business owners that I deal with. They started as a auto detailer and and then all of a sudden they had to hire people, and they grow into window tinting, and then they grow into auto. They grow it from that into auto tinting usually, and then then they go into body work a little bit, and then and that's just how these young businesses grow. And I love being there to help mentor those businesses through that. So that's where I found my niche. So. Yeah. Okay. Okay, I can do. I would love you to have more specifics, because so like our working capital situation. Okay, so there's two different types of businesses in this world, or not businesses, two types of lending options, what you're talking about. There's the equipment finance, which is for a tangible piece of equipment that is going to add revenue to your business. And why that's relevant is tangible in my world means something that has a VIN number or a serial number that is depreciable on taxes. Anything that's you can list on tax returns as a depreciable asset gets a different tax code filing, and the credit guidelines are different, and the pricing is different. For working capital, which is a whole different animal, which I offer it, but I'm not the biggest fan of working capital because it's a bit of a death spiral. That shit's expensive. They are taking your last 3 months bank statements, and I know it's all over the internet, borrow money from all these places. Um, but it is a death spiral. They're borrowing money between 30 and 120% monthly. Like, it's insane margins. And I get it has a place in this world. There are occasions where I'm helping a customer right now. They work for the Forest Service. They have to pay for upfront for the. If you want to get it, your question is not fully parsed. Okay. You're not married to the asset that you're trying to buy. Like, as a lender, we don't care who you buy from. It just needs to be a qualified, what we view as business essential in this space. If you're borrowing against equipment, it needs to make sense for the business. If you are a veterinarian trying to get auto shop equipment, that doesn't make sense. It's not going to pass test in an audit, and then everyone's going to get in trouble. We don't need that problem. Um, but does a auto body shop need a lift? Absolutely. The computer systems? Absolutely. Do they need security? Absolutely. Do they need paint booths? Absolutely. Do they need a courtesy van? Maybe. If the credit's right, yeah, I'll do that. Sure. Do they need new signs? Absolutely. On my main core business, yes. On where I'm born and raised, yes. The new world, and by new world, I'm talking 15 years, working capital off of the bank statements, where they'll give you up to 10% of your annualized revenue based off of your monthly bank statements with no questions asked, based off of that you're going to continue your business. And it's just extremely predatory lending. It's because each of these companies, when you take out your first working capital loan, within days of them, the next two or three will come on and ask for more. And I have companies offering me to put people in 7th and 8th position on these working capital loans. So these people will borrow $100,000 from lender one. Within a couple of days later, these are already known high risk, high rate, just nasty shit. And a second one will come on and call them and say, "Hey, we just found you borrowed from On Deck. Do you need more money? Did that cover your?" And then they put a second, and they literally keep compounding these up to like 7th and 8th place. And it's just, you cannot pay that type of interest long term, and it will bury most businesses. So that's why I am not a huge fan of them. In the right circumstance, if it makes sense, under the if the pricing can be made right, or if the justification's right, yes. We have a customer now that needs $350,000 to buy something for the Forest Service, but they have to pay for it up front. She's like, "You know what? This will change my business. We're only going to need it for a month or so to cover the 90-day gap between when we buy it and when we get paid for the Forest Service." I can feel good about it, but I can't just put a customer in something that ultimately, because I'm looking for a long-term relationship, right? So that's my own personal. There's plenty of places that don't give a shit. I get, but I don't care. All right, we're going to go into working capital versus equipment financing and the value of each. My background and field is in equipment financing, and I see a huge benefit for it. So I'm going to be biased to that, but we'll still talk about the other options because there are options that are available, and you should discuss. And sometimes each option is available for you. But my biggest advice is in the equipment finance world is in the small ticket size, which is the deals between $10,000 and $500,000, is ease and access of capital and the ability to leverage your business when you are growing your business and expanding your business and your cash flow is limited and you don't want to show anyone anything, but you can make this shit work. You know how it is to take your business from $10,000 a month to $25,000 a month. And you just need a few more additional pieces of equipment or working capital. But usually you need equipment before you need working capital. And sometimes you need both. That's fine. We can help you with either. But that is the type of business owner that has the hustle, knows what they're doing, has reasonable, not shitty credit. We need you to have some credit. Credit is part of the build in a young business. And if you don't have credit yourself, get partners, figure out how to dispute your credit. Get off a whole nother tangent, but it's part of the build. Credit does matter. But you know you can make this shit work. And you don't have the financial capacity on paper to show everyone, but you know you can put your shit together and you know you got some decent credit, then yes, we can take your business and expand and grow it and take it from this young small business with little to no cash flow out of your pocket. Like literally we could drop you into $150,000 worth of equipment for what, $2,500 to $3,000 a month. If you've been around for a couple of years and have a reasonable credit score, reasonable, we're hoping for like a 650 or better. But tell me if that wouldn't change any of your businesses. If we were able to, and literally, depending on your credit history and how long you've been around 3 to 5 years, we can probably drop you into 3 to maybe 750 might be stretching it, but still, tell me if that wouldn't change your business. If we could put another $200,000 to $600,000 worth of equipment in your inventory that's producing income for you every month. That's definitely something to think about. And that's the advantage of working capital. You don't have to have $600,000 in your hands to get $600,000 worth of equipment. You need to have $10,000 or $20,000. I mean, I need you to have $20,000 or more worth of working capital on hand. And by working capital, I'm talking about your business bank statements that show your average balance. We literally need you to be here, not only to make these payments so you can borrow more money and grow your business and expand and grow. So, but am I always going to look for your bank statements? No. If your credit's right, you've got a 700 plus FICO, you've been around a while, you have other borrowing experiences. I cannot tell you how many hundreds, thousands probably of customers that we have got that type of financing for on a daily basis. I mean, we talk all the time about the B and C credit situations, but if you've had a business that's been around 5 years and you've got a 700 plus credit FICO credit score, your financials might be upside down and not necessarily you were recently declined by your bank. Because anytime you go to the bank, they are going to be looking for full financial package, taxes, all the full anal probe. That is not the kind of deals we're looking for. We are literally looking to have you approved within hours and have your equipment within days. So if you've got 5 years in business, you've got a 700 plus FICO, and you have a little bit of borrowing experience under your belt, I would easily say anywhere between $150,000 and $750,000 could be made available to you within hours. That's true across the board. I don't even have to say that without even thinking. That is actually very true across the board. You make your payments on time, you establish that history. We're probably not even going to look at your bank statements. 50-50 chance on that one. So that'll be a fun bonus when you get approved without it, right? Point of leverage on financing. That's something that the equipment finance people, such as myself, that are really good at is leveraging that. Working capital, whole nother animal. Working capital does have a place in this world. A working capital line of credit, I love that. We can get those types of things in the anywhere from 12 to 18%, depending on your credit situation. Those are available for you all the time. Working capital, you have to know who you're getting in bed with. That's the bottom line on working capital. It has its purpose. They're going to take your last 3 months bank statements. They're going to annualize your income. So let's say your annualized income is $750,000. They're going to lend you between 8 and 12% of your annualized income. And the rates are going to run you anywhere between 35 and 65%. If you're happy with that, I've seen them even higher. But yeah, on average, that's what it's going to cost you. Your money's going to cost you about 50%. And that is not long-term sustainable. Does it have its place in this world? Absolutely. If you have a short-term need, you need to cover a payroll expense, you need to cover a supply order. But the issue is on these working capital lenders is they They're very predatory. And as soon as you get one, you're going to have two or three more come swim out of the woodwork. They're going to come find you and they're going to try and lend you more money. And there are occasions, and I've helped many a customer with this, but it's got to be a short-term solution. And I know we all say it's going to be a short-term solution. And it's a vicious cycle that I see too many businesses fall down. And as weird as it sounds, I cannot be a proponent for your business to put you in this product if it's not going to benefit your business on a long-term basis, because we are looking about the relationship beyond the first deal. And I know I've heard a lot of other channels talk about the relationships, and relationships are what matter. We want to have a business here for the long term. And so working capital is definitely not my first choice. I see a place for it. And maybe what we do is we combine an equipment finance deal with maybe a small $25,000 or $50,000 working capital loan on top of it. That I could probably be on board with, which I guess we do. So if you found any of this helpful, which I hope you did, I'm really good at some of the things that I'm really good at. Please give me a call. Either hit the website, directcreditfunding.com, hit the link or surprise or the buttons here or here, wherever they've decided to put those now. I really enjoy helping small businesses, talking about their situation, getting real in the dirt with them, understanding what they need. And because I can change the trajectory of a business. I've been doing it for 28 years now, and it's what I love doing. I love coming here and talking to friends and seeing how I can help a young and small business take itself to the next level, because the ability to do so is well within most anyone's grasp. We just need to talk about it. And that's really, let me know what's really going on so I can help you, help me, help you. So link and subscribe, Jason, directcreditfunding.com, 844-7676.